much, and welcome everyone again. It's so great to have you all back at another weekly Wednesday webinar. I know everyone is excited for the Super Bowl weekend, and if you're like me, I'm actually excited for the commercials. So hopefully there will be some fun commercials going on this weekend. Don't ask me about the teams because my Commanders didn't make it. We were so close, but I hear we did a lot better than a team in Dallas. Also one up north in Pittsburgh. So I'm not throwing anything, not throwing any shades because Eddie is on and some couple of Steelers fans on the call too. But with that being said, again, we want to thank you all for making time out of your busy schedule and being with us here at another weekly Wednesday webinar. Today's topic, as Eddie alluded to, is financing tips for home improvements. I know spring season is around the corner, believe it or not. I mean, it's insane. Although we are bracing for some winter weather here in the DC area, but by the time we know it, it's going to be spring. And with spring, I know I'm actually one of those people that I'm thinking I'm already thinking that I'm probably gonna have to do a few upgrades on my deck. And my wife has been pushing me to do some work with the kitchen, so I might have to look and see what I can do with the equity that I have on my house and how I can make that work. So with that being said, I don't want to get too much into the presentation. I definitely want to do the introductions. We do have an amazing panel this evening for you all that would be leading this presentation. We do want to thank our lending department that is going to be leading the presentation today. But before I introduce them, I wanted to just reintroduce the familiar faces that you see here almost every Wednesday. You already heard his voice, Eddie from the marketing department, also Andrea Londono. The two of them are going to be keeping track of the chat and the Q&A feature. So if at any point anyone have any questions, we highly encourage you to please interact with the chat or the Q&A. And it is our commitment that we will answer every question before we let you go tonight. Also, from the marketing department, we have the person in charge responsible for putting all the content for us, Carrie Lazar from the marketing department. Thank you, Carrie. And before I go into the presenters for the evening, we do have a very special guest. We're actually happy and proud to introduce you all to our new Chief Lending Officer, Mr. Don DiMatteo, who is actually he's on the guest list tonight, but hopefully in the near future we might have him on the panel list. So that you can actually get to meet him soon here. But we are so excited to welcome Don to the United States Senate Federal Credit Union family. We are really excited. He's bringing a lot of experience. And we cannot wait to see what he's gonna do for the credit union here with us. With that being said, the main presenter for the evening, we have Kelly Pasilio, who is the director of real estate lending. She will be leading the presentation. Also, Elton Roshi, who is the consumer lending manager, will be leading the presentation. And I also don't want to leave her out. I know she's also a guest. We do have the VP of lending, Angie Collier. So with that being said, Kelly, enough talking from my side. Let me hand it over to you and take it away from us.
Hello, everybody. Thank you for joining us. We have several slides here, and we're going to go over just suggestions and tips on how you should finance home improvements. There are a few options and some things to consider. Excuse me. I'll just go ahead and read the slides, and then we'll have questions and answers at the end. So feel free to put in your comments in the chat. Today's discussion, as I said, it's understanding your loan options, secured versus unsecured financing, leveraging home equity, which are HELOCs. The HELOC is a variable, it's a line of credit on your property, and then a home equity loan, we call them home equity loans. It's fixed. It's a term with a fixed rate, a fixed payment. So we have 4 or 5 products that you might be interested in. And then we also have an unsecured product for smaller products that might work better for you. So I'm gonna go through the home equity and the secured loan products, and then Elton Rashi, our consumer loan manager, will go over the unsecured products that we have. Next, next slide. Okay, renovations that add value and appeal. Okay, so this is something to think about because not all improvements, people there are home improvements and then there are also repairs, and a lot of times people think repairs are improvements, or replacing a roof or replacing a furnace. Those are, you need a furnace, you need a roof. Those aren't really enhancements. But that being said, if you're getting your house, if you plan on selling your house in the future, or if you plan on buying a house, having a new roof and updated furnace are certainly pluses. So that's not necessarily going to add value to your home, but it's going to be an incentive, especially if there's competition in your neighborhood to buy a house. So first thing, kitchen remodels, modern appliances, cabinets, they boost your value. Bathroom upgrades, new fixtures, tilings, energy efficient features, improve appeal. Actually, updated tubs and showers. Walk-in showers are big now. With a lot of the newer homes, you don't see the traditional bath shower combo unless it's in a secondary bathroom. And it used to be, the wisdom was, you always want to have a tub, and that's not always true now, depending on what type of property you have, especially with condos. A walk-in shower that doesn't have a tub is usually fine in most situations. That being said, in a larger house, usually, a family wants a tub option. So, energy efficient improvements, uh, solar panels, insulation, high efficiency windows, lower cost attract buyers. Curb appeal enhancements, landscaping, fresh paint create strong first impressions. Let's see here, I'm having trouble. Okay, I can see it now. Basement and attic conversions, transforming spaces increases square footage and functionality. Okay, next. How much do home renovations cost? Okay, this is just a guide, but this will give you some kind of idea. But of course, the size of the house, the area that you live in, and of course, the grade and of the supplies and appliances and that sort of thing make a difference. But so this is just a basic average range. Living room remodels, $5,000 to $10,000. Bedroom remodeling, 1,500 to 5,500. Kitchen renovations, 14 14,550 to 400 to 40,000. Bathroom remodel costs 6,000 to 28. I will go back to the kitchen remodel. That uh, that's a very broad. There's a broad range, and the bigger your house, the more it's going to cost. Kitchen remodel have become more expensive in the last few years, of course, like everything else. Basement renovation costs 12,000 to 34,000. Home theater installation costs 10,000 to 60,000. Attic remodeling 4,600 to 16,000, and then garage renovation costs 1,500 to 50,000. So, garage renovations that $50,000 price tag, I guess that's if you have a 3 car garage, or you want to insulate it and, have some other features and make a workshop out of part of it, that would probably include some of those costs. Next. Okay. Um, before starting, I'm sorry, I'm having a little trouble. Can you hear me? Hello?
Yes, we can hear you,
Oh,
Kelly.
okay. I'm sorry. I'm having trouble seeing the slides. Okay. Cost versus value. Okay, you need to focus on upgrades that provide a strong return when you're selling your home. Functionality, improvements that enhance daily life, like kitchen remodeling, added storage, bathrooms. That's something to consider. Energy savings, EDL lighting, of course, too, power, solar panels have, become big, and they're becoming bigger. They're becoming more prominent on the East Coast. In the West Coast, it's pretty normal to have solar panels. And then, of course, what buyers are looking for can influence the best areas to upgrade, and those are market trends. Okay, next. Okay. Carrie, can you move the slide over a little bit to the left? For some reason, I'm having trouble seeing everything. Okay. Okay, so financial terms. Okay, APR, okay. Okay, I'm on financial terms. The APR is the total cost of borrowing. It's not just the principal and interest. It's also any costs that are incurred when you take out the loan. For example, closing costs, recording fees, appraisal costs, that sort of thing. That's the APR, the annual percentage rate. And then we have fixed versus variable interest rates. A fixed is it's a consistent payment. You have you'll have the same rate for the life of the loan, and the payment will be the same. And then, of course, a variable rate is we have HELOCs, lines of credit, they're called. And we have two products on those. One's interest only, and one is amortized. But that's something to think about if you have long-term goals but don't want to do everything that you need to do all at once, or you're anticipating um, other things, because that we're talking about home improvements, but with a line of credit you can use it for other things. People use it for student loans, debt consolidation, that sort of thing. But the majority of the applications that we see for the lines of credit are for big projects. But of course, too, you don't want to, if you're going to be doing it in different time frames, you may not necessarily want to borrow all that money at once. So if, let's just say, for example, you have $100,000 line of credit, but your first project's only going to cost you $10,000. Well, you'd only want to draw that, and that's what you're paying. That's your repayment is based on that, principal and interest, or interest only if that's a product you take out. But if you don't need all the money, you don't want to start paying on it immediately. So that's a nice feature. And then, of course, the repayment period. There's a draw period on a home equity loan versus a fix. So if you got a fixed term for 100,000, you would get a check, or we would deposit $100,000 into your account, and you would start paying that back immediately, the full amount. So that's something to consider. Okay. Loan types. Okay. Secured loans. Again, this is what I'm talking about. It's backed by collateral, and the collateral is the equity in your home. Usually the interest rate on home equity loans are going to be less than unsecured loans, because we are doing it strictly based on your credit and income and your debt ratio, your credit worthiness. So there's a higher risk to the financial institution. So that's why the rate is normally higher. with a secured loan, your home is a collateral. So, those that you need to keep that in mind also. Okay, next. Okay, so with a secured loan, collateral is required, which would be your home. Um, these are some of the features that I just mentioned. Lower interest rates, higher loan amounts, longer repayment terms, and again, they're best for large scale renovations versus small. Um, and then unsecured loans are best for smaller projects. No collateral needed. Approval is based on your credit worthiness. Faster approval process, flexible loan amounts, higher interest rates, and they're good for quick updates or minor renovations that don't require major upfront investments. Next, and you would choose a secured loan if you're financing major renovations that add long-term value. You have the available home equity to leverage. That's another thing to consider too. And you want a lower interest rate and longer repayment terms. And then, of course, with signature loans, it's usually smaller amounts with quicker terms. The interest rates, of course, are usually a little bit higher. And you don't want to use your home as collateral for whatever reason. Also, too, it's a quicker turnaround. Although with the secured loans, I'll let you know, normally, unless there's some type of snag, we can usually close and fund a home equity loan within 30 days, which is a pretty good turnaround. Next. Okay. And then, of course, you want to access your project scope. Large remodels may justify a home equity loan. Again, a smaller improvement may be suited for a personal loan. Review your financial situation and compare rates and terms. And of course, we can help you with that. Please, if you're unsure, we have loan experts in both the home equity department and in the consumer lending department. Okay. Home value, mortgage balance, home equity. As you pay down your mortgage, your equity increases. You can borrow against your home equity loan. And I'm having trouble. I can't see the whole slide, but basically, you can do a fixed or a HELOC to fund the renovations. Benefits of using your home equity loan, the equity in your loan. Okay, lower interest rates, again, higher borrowing power because of the loan amounts, depending on what your equity is, flexibility use for the funds, and potential tax benefits. Again, we can't give tax advice on that. There are some restrictions, but if you're considering doing a large project, you want to inquire about that, whether or not it would be deductible, and if it would be it would make sense for you to do that versus a secured loan. And then, how can we help? Again, please give us a call, and we can go over all our products with you and determine whether or not, if you decide to go with a secured loan against your property, one of our staff members can help you determine which is better. They can do payments on both. They can, determine roughly how much you would qualify for. So, please feel free to call us. We're here from 10 to 4, Monday through Friday. And then this just gives you a little bit of background of what we offer. You can borrow up to 90% of your home's equity. The loan amounts range from $7,500 to $500,000. Now, we only lend up to 90%, up to $400,000. If you borrow more than $400,000 and we go up to 5, 80% is the maximum loan to value. And the way that's determined is whatever your house appraises or whatever we determine what the valuation is. Um, we do 80 or 90% of that. You subtract, of course, what you already owe if you have a first, and that's normally what you can borrow. Of course, too, you do have to qualify for the payment. So we also have flexible terms. And again, I just briefly talked about the tax deductible. And you can apply online, and then we can have, if you go ahead and go online by yourself and apply, especially if it's in the evening or on the weekends, that application goes into our queue, and then the next business day, you'll be contacted by one of our loan processors. This is the home equity loan. You can access as you need it. Again, if you don't need all of the money at once, it's there. It's kind of, I don't like to say credit card, but that's a good way of describing it. It's a line. You use it as you need it. Although you don't get a credit card with this. The line's available, and you call us, and we can activate it for you. And that's very easy to do. And then we have two HELOC products. Again, we have an interest only. That may be something that you'd want to consider if you plan on selling your home, in the next 5 years or so. Um, excuse me. What you have to realize, though, with the interest only loans, if you're only making the minimum payment, you're not paying down your principal, you're only paying interest. Again, there might be a reason for that, especially if you plan on selling the house and you have equity. But again, we can discuss that with you. And then we also have what's called a smart line, where it's still a line of credit, but it amortizes. So you're paying down the principal as you make your monthly payments. Okay, next. And then I believe Elton is on the call. He is our consumer loan manager, and he is going to discuss unsecured loans for home improvements.
Good evening, everybody. Thank you, Kelly, for your part of the presentation. I'm going to be talking about the unsecured loans. My name is Elton. I'm the consumer loan manager here at US Senate, and we offer many different types of consumer loans. And one of them is our unsecured home improvement loans, which you can borrow up to 125,000 with a maximum loan term of up to 180 months. And why would an unsecured loan be beneficial for you? It's because one, it's not tied to collateral. It's not tied to a home, and you may not need to borrow as much as if you were to borrow with a home equity line of credit, because those have minimum loan requirements. So if you need 5,000 to do like a fresh coat of paint, or do some minor repairs around the kitchen or your home, then this may be a good option for you. And also too, uh, yeah, the process is fairly easy and quick. It doesn't There's no appraisals required because it's a personal loan. It's a fixed loan term and rate. So that's something that is locked in. And again, it's used for smaller projects, new flooring, a new roof, or you're putting in new shutter, gutters, whatever. You could, or if you want to put in a pool, you could definitely do that. If you don't have enough equity in your home, this will be another way to utilize it. And is an unsecured loan the right option for you? It all depends on what your needs are. And if you just need just a short term uh fix versus something that will be more long term, Kelly, Kelly's team, they specialize in the home equity long term, whereas for us, if you need to borrow a small amount like $20,000, this would be a great option for you. And how can we at USSFCU help? We can help you in many ways because we have a variety of loan options that we can assist you. It doesn't have to be just our home improvement loan. We have personal loans. So if you don't want to do a home improvement loan, we could do a regular personal loan. Our personal loans go up to 70,000 and your loan term can be up to 84 months. Or we have a line of credit as well. This is our unsecured line of credit. It goes up to 50,000 and it has a variable interest rate, and then the payment is very flexible as well. And then in addition to, we have our credit card as well, that you could have a credit limit up to 50,000 as well. So we have many ways that we can assist our members. And then one of the other options that we can assist you with is what is called a home improvement plus loan. This is ideal for borrowers who have limited equity in their property. You may be able to borrow up to 110% of your home equity, providing your funds even if you haven't built significant equity in the property. Your loan amount would range between 7,500 and to 70,000, with repayment terms up to 180 months. And if whether you're looking to tackle repairs or you're planning for upgrades, this loan is a straightforward and affordable way to finance your projects. As I talked earlier a bit about our personal loans and line of credit, we offer competitive interest rates, and the personal loans you can use for a variety of reasons: home repairs, renovations, updates, um, any type of expense that is applicable. It's a fixed rate. Uh, they are a quick turnaround for us because we don't have to go through appraisals and the whole process that a home equity requires due to additional regulations. Our lines of credit, those are very easy to set up as well. We also offer what is called the easy line of credit. This is for first-time borrowers or someone who's wanting to rebuild their credit, or if you just want to use it as overdraft protection on your checking account here at US Center as well. And then our premier line of credit, this is our line of credit that goes up to 50,000. And you could use this also as overdraft protection against your checking account here at US Center, but you can also use it for any available need that you have. It works similar to a credit card or home equity line of credit. You would just advance the funds out of the line of credit into your US Senate account, and then you can use those funds up as you need them. And then our home equity lines of credit, it's a revolving line of credit that you can use ongoing. You can borrow up to 90% of your home equity. The rates are variable, so they are tied to the Fed funds rate. As the Federal Reserve adjusts their rates, whether up or down, this also ties to it as well. And we have many options with our lines of credit, and then you can find more information on our website about that. Our Visa credit cards. Our Visa credit cards are another great option. It offers you flexible financing options. You could go to Home Depot or Lowe's or any home improvement store, and if you're a DIY type of person where you want to just buy the materials and do the work yourself, and this is a great way to use it and earn points as well if you have our rewards credit card. If you want to cover unexpected repairs, if you want to upgrade your appliances, in the smart rewards credit card and smart rate credit card are great options for you. And why do we choose USSFCU? Because we are your financial partner. We are there to help our members. We have carried the people helping people model for 90 years now, and we continue to uh, be there for our members when times are great and when times are more than difficult. Our goal is to find solutions for you. So it's important that we can work with you, and you trust us to give you the best service and the best financial assistance. So we have competitive rates. We have low to minimal fees. Our credit cards have zero balance transfer fees. We have no origination fees on our loans where other financial institutions have those types of fees associated with. We have no prepayment penalties associated with our loans. You could pay this off at any time without a prepayment penalty. And we offer affordable closing costs with our home equity lines and home equity loans. And we have no annual fees on our loans and credit cards as well. And so let's take the next step. So you have ways that you can apply. You can apply online uh, for a home equity at ussfc.org/equity, at our toll-free number 800-374-2758. You can apply in any of our branches. And then if you have any questions, don't hesitate to reach out to our communications department, and they'll forward your questions directly to home equity or consumer loans, whichever one you're asking specifically about. But the same thing with our consumer loans. You can apply directly through our online banking portal. On the left-hand side, there's an apply for loan option, and you can choose personal loans or credit cards or our line of credit options as well. So that ends of the presentation, and we would love to answer any questions that all of you have.
All right. Thank you so much, Elton and Angie and Kelly. I'm sorry that was a great presentation. We really hope you all found it helpful. As I stated at the beginning, we are getting close to the spring season. So I know a lot of people are probably already thinking about some home improvements that you want to do. Whether you wanna dip into the equity you built on the house, or perhaps you don't want to touch the equity, then the United States Center for Credit Union, we are a full service financial institution here, so we can help you in any type of scenario that you want to look into. Again, whether it's secure or unsecure, we have an amazing team with a lot of knowledge, a lot of experience that is ready to assist, ready to help you make that dream come true. Again, I know I'll be working with my internal peers here very soon, because as Eddie has told me that happy wife, happy life, right, Eddie? And so she is really pushing for that kitchen, to get remodeled. So definitely wanna look into that. But again, I know. Thank you, Elton. Thank you, Kelly. Thank you all for taking the time and being with us this evening. With that being said, Eddie, Andrea, I believe we might have a couple of questions. Also, there might be a few comments there in the chat that you guys want to share with everyone. So I'll go ahead and pass it over to y'all.
Yeah, of course. Okay, so the first comment, we have two quick thoughts for all considering home improvements. One, plan for the unexpected, be prepared for any unexpected costs which will appear in the project project. Ask for a larger amount than needed, so you are covered. 2, some energy efficient upgrades and or appliances may qualify for tax benefits as well. Talk with your tax advisor. That's the first comment. Thank you so much, Dawn. And the first question is, what is the process for determining the home's value?
I can answer that. We have a couple of methods. First of all, if you borrow 250 or more, we automatically have to um, order a full appraisal to determine the value. If you borrow under 250, we pull an online valuation. It's called, sometimes they're called AVMs. But we pull that, and if there is enough value on that online determination, we may not necessarily have to order an appraisal. So there might be, if there's enough equity on the online value and it's under 250, that'll save you a little bit of money in closing costs, and it'll speed up the processing time. But we can't really determine it until you apply. So once you apply for the loan, a loan processor will call you back, and we'll pull that online valuation regardless whether or not the loan is over 250 or not, just to gauge it, to give us an idea, because sometimes you may hear your neighbors talking, or a realtor may tell you your house is worth more than what the value is online, and those values are it's a comparison. They're just going into the tax records and seeing a price. So for smaller loan excuse me, for smaller loan amounts, we can do that, but for larger ones, oh, excuse me, I apologize, we need to have somebody go out and actually see the house. So, and then they'll use comps, and comps are comparables, which are, recent sales for comparable houses in your neighborhood. So that's how that's done. But the first step is to call us and, apply, and we can help you out with that.
Thank you so much, Kelly. The next question is, how does a walk-in tub affect a home's value?
You mean a whole, no, it would have to be, bathroom remodels can help with the total value of the house. I mean, that's an improvement that normally will add value if it's been updated. But just doing a walk-in shower, that isn't necessarily going to add to the value. Now, that being said, if you're getting ready to sell your house, having a new walk-in shower, might be a desirable feature that will get will get people in. But just doing a shower, I mean, if you're replacing a walk-in, a combo tub, to a shower, that isn't necessarily going to add value to the home if that's all you do. I mean, it's certainly not a negative, though.
And the next question is, do you think that tubs will come back in style in the future?
I'm sorry, what was the question?
Do you think that tubs will come back in style in the future?
I don't know. I mean, I tell you, not for as the population ages. I know, older people want those walk-in showers. So that's hard to, trend, it's hard to tell with trends, but the older populations, and they want the walk-ins. You know, a lot of family members, a lot of families, eh, you know, they like that tub. They like having a tub just with children. So, and a lot of times, and like I said, in the newer homes that they're building, the primary bathroom will usually have a separate walk-in shower, and then maybe a, a, a soaking tub, a separate soaking tub. And then you'll have your family communal bathroom, which has the combo.
Thank you so much. So, and then another question is, what are the pros and cons of using a HELOC for renovations?
Well, the the pros are, you know, you have that line there and you don't need to use it all at once, and it's there. But you know, if you don't use it all at one time, you're not paying, your payment is only based on what you use. So that's the benefit. That's what it's there for. The cons are usually they're a little bit higher, but our home equity rates are on our HELOCs, they're based on prime and prime plus 0. So whatever that is, that's what the rate's going to be, and that adjusts quarterly. You know, typically fixed loan rates are at a lower interest rate. Although there was a time there when prime was, you know, 3%. So that was a little different situation. So those are the cons would be the rate. Other than that, though, you know, you have the flexibility with the line of credit.
Another question is, what are some common mistakes homeowners make when financing home improvements?
Well, as Don mentioned in his comments, two things. A lot of times, you know, you didn't borrow enough. So, you know, you may want to, uh, you know, if you have the equity, you may want to, especially if it's a line of credit, you may want to apply for more money and then you don't need to use it. Now, of course, it's not that much of a difference in costs, but you know, there are some closing costs with home equity loans, and recording fees, depending on the county or state that you live in, are determined by the actual line of credit. So, but that's usually not a deterrent when you're thinking. So a plus would be, you know, when you're considering it, is to, you know, borrow a little bit more, especially if you're doing a big renovation, because you don't want to come back, you know, if let's say, you know, it ended up being a lot more than what you had anticipated. You know, you may want to get estimates before you apply, just to, you know, have a realistic idea of what things are going to cost. That being said, you know, you want to, you know, you're using the equity in your home. So, you know, you want to be you know, mindful of you know, what you're doing and what kind of improvements you're doing. You also, you know, there is such a thing as over improving your house. You know, if you live in a neighborhood and they're, you know, they're older homes where people aren't going in and blowing them up and doing everything. You know, you may not want to do top of the line renovations for your kitchen or bathroom. And when I say top of the line, I'm talking about the actual cost, you know, stuff that I mean, you're always going to pay labor and there, but you know, you have to be mindful of that also. You know, you don't want to over improve your house if you know the rest of the houses in the neighborhood don't have those type of features, because that's something that you want to consider. That's where you may not get your money back. with the value if you've over improved. Although in this area, you're not seeing that too much. But in different parts of the country, it's more of a concern.
Our next question is, should I refinance my mortgage to pay for home upgrades?
Your first mortgage, I'm assuming you're talking about. If you do, well, depending on what your interest rate is. I mean, if you have a lower interest rate, if you financed it a few years ago and have a pretty decent rate, you probably want to go with the home equity loan versus refinancing your first. But that's something that we can do also.
And then, what factors should I consider before borrowing money for home renovations?
Just your needs. What's your goal and what you want to do. You just have to really think about it, but you can just talk to one of our loan officers and they might be able to give you some help on that. But just do a comparison and we can help with that also when it comes to the actual cost of what this loan is going to cost you throughout the life of the loan. And I see here too, Don has added some comments too, and I'll go ahead and read that, Don. It says, for large projects, you also want to read the contract carefully and know what your guarantees are in case any issues occur. What are the timelines you're held to? What are the timelines the builder are held to, et cetera, et cetera. It is a post-improvement inspection for all the sign included in the contract. That very good information. Yeah, if you have a contractor coming in, you really want to understand the contract and understand, what you're getting into. And also too, make sure they're bonded, insured, get references if you can, or referrals. You want to make sure that they're licensed. That's another thing that's important.
Would a 75,000 loan qualify for unsecured?
Our regular personal loans are up to 70,000, but if you're gonna do a home improvement loan, those can go up to 125,000. With the home improvement loan, I did want to add that we do need a contract for that.
And I think something to emphasize, after we heard all these answers for these questions, which have been so many great questions, is talk to us, contact us. You see our information on the slide. Let us know what your goal is. Like, what are you trying to accomplish? What are you trying to, what are you trying to get to? What the end goal is. And that's the reason we have all these representatives and all these experts waiting for you to contact them, because we want to make sure that here at the United States Senate Federal Credit Union, we help you reach your financial goals and dreams. So if you have any doubts, any concerns, or anything that you're wondering, you're not sure about, just contact us. Have those conversations with us. And like we were saying, Elton was emphasizing, it's just people helping people. We're here to help you. We're here to serve you as well. So also one thing that I wanted to mention, it's another comment that Don was saying, is that if you want to have an estimate of how much your home is value, you can go to Zillow or you can go to Redfin. They can give you an online estimation, which might not be fully reliable, but that's the reason why we're emphasizing that you can contact Kelly and her team or the home equity department, so we can give you a more specific answer, especially if you want to do some building, some constructions, we can give you that, appraisal value once we get into the details of what you want to do. But that's just those are some ideas that you can do. You can check online, put your address, and you can see an estimate online as well. And this topic touches home because as Kelly knows, as Angie knows, when I came to the back office, home equity took me with arms open, So, when you were answering all these questions, it brought back memories, doing all the paperwork for our members, getting those calls after, they got that loan. They were like, Eddie, I was able to build this, to build that. My kids now have a pool in the backyard. And just hearing those testimonies is just, it speaks volume. I mean, to me personally, that, here at the United States and Florida Credit Union, we're helping you reach your financial dreams and goals. So I just wanted to mention that as well. Milton, I want to pass it on to you with the closing remarks.
Thank you, sir. Appreciate it. And again, as always, we just want to thank you all for making time out of your business schedule and being with us every evening. We definitely want to thank our experts that came in today, Kelly, Elton, Angie, and our newest member of the team, Mr. Don DiMatteo. So we are really excited to have you participate in this webinar. I think it was very helpful. Lots of great information. And again, as Eddie stated, if anyone, if you have any questions or you have any doubts or any concerns, or just, if you're curious as to, what we might be able to offer, whether it's secure or unsecure, please give us a call. 800-374-2758. We'll be more than happy to answer any of your questions, concerns. If you want to come in person into into an office, a branch, by all means, you can come in and see us in DC at the Hart branch or in our headquarters branch over at the Old Town Alexandria location that we have. So again, Kelly and team, thank you. Before we let you go, we definitely want to invite you all to come in and join us next week. We actually have an exciting webinar next week. Believe it or not, as I mentioned last week, Eddie got promoted recently, and with that, he's got extra money. So we know that Valentine's, it's around the corner. And so with that being said, we are actually going to be giving away a $200 Visa dining gift card for a lucky winner next week. So definitely come and join us. We're going to be talking about love and finance. It's the perfect subject for Valentine's week. We would love to have you on board. And again, why not, right? I mean, a chance to get a $20 gift card on Eddie. I wish I could participate, but unfortunately, I've been told that I'm not able to. But again, thank you all. We hope you all have an amazing weekend. It's Super Bowl weekend, and go. I don't know. Go team, I guess. I don't have any. I don't have any favorite, but thank you all, and hope everyone has a wonderful evening, and you all stay safe. Be careful out there. We'll see you next week. Thank you.